Imagine a magic wand. You wave it and whatever you desire appears. A new phone, a fancy dinner, even a dream vacation. No money leaves your pocket. Sounds amazing, right? But what if this magic wand was actually a ticking bomb, a silent assassin for your bank account? Because today, I'm going to prove to you that credit cards are not just a financial tool. For most Indians, they are a legal scam, a perfectly legal system designed to trick you, trap you, and keep you financially struggling, all while the banks get richer. This isn't just theory. We'll break down the exact tricks they use, the hidden math, and the psychological traps that ensnare millions of Indians every single day. But here's the crucial part. Stay till the very end because I'm not just here to expose the scam. I'm going to show you exactly how to flip the script, how to use their own system against them and make them pay you. This is the truth about credit cards that no bank will ever tell you. Let's start with their most insidious weapon, the minimum payment. Look at your credit card statement. Below your total outstanding amount, there's a small number, often just 5% of your total balance. That's your minimum payment. Looks easy, right? Looks manageable. That's the first psychological trick. It anchors your brain to a small, affordable number, making a large debt seem less intimidating. Let's take a real-life example. Imagine you bought a new smartphone for 50,000 rupees during an online sale. Your credit card has an average interest rate of, say, 36% per annum, which is 3% per month. If your bank sets the minimum payment at 5% of your outstanding balance, that first minimum payment would be 2,500 rupees. Seems fine. But here's the horrifying truth. If you only pay that minimum amount every single month, it would take you over 8 years to clear that 50,000 rupee debt. And that $50,000 phone, it would end up costing you an astonishing 1,05,000 to 1,10,000 rupees. That's more than double its original price. The minimum payment isn't designed to help you get out of debt quickly. It's designed to keep you in debt. It ensures you pay just enough to avoid default, but not enough to escape the crippling interest, effectively making you a long-term revenue stream for the bank. This isn't a tool, it's a financial leash. Even if you're one of the disciplined few who pay their entire bill on time, you're still being scammed. How? Through something called merchant discount rate, or MDR, or simply swipe fees. Every time you or anyone else uses a credit card at a shop, the bank charges that shop owner a fee, typically between 1.5 to 3% of your transaction. Think about it. A shopkeeper sells you an item for 1,000 rupees. If you pay with a card, they only get 970 to 985 rupees. So what do? They increase the price of that item for everyone, whether you pay cash, debit, or credit. So when your bank proudly advertises a 2% or 3% cash back offer, they're not being generous. They're just giving you back a tiny portion of the money they've already extracted from the economy. You're effectively paying a credit card tax on every single item you buy, whether you use a card or not. The rewards are just crumbs from a loaf of bread that you bought for yourself at an inflated price. This is where the scam gets truly psychological. When you pay with cash, you feel it. You see your wallet getting thinner. That physical act, psychologists call it the pain of paying, is a natural brake on your spending. But a credit card, it's just a piece of plastic. There's no physical loss, no pain. You swipe, you tap, and the transaction is done. MIT studies have shown that people are willing to pay up to 100% more for the same item when using a card versus cash, because the psychological friction of parting with money is completely removed. This frictionless spending is why it's so easy to walk out of a mall with bags full of things you didn't budget for. That $2,000 shirt, $3,000 shoes, $1,500 dinner, they feel like freebies until the bill arrives. This isn't accidental. It's a deliberate design to bypass your brain's natural financial safeguards. They are hacking your brain to make you comfortable with overspending. Banks operate in the fine print. Most Indian credit cards come with a variable annual percentage rate, or APR. This means the interest rate they charge you can change, often linked to the RBI's repo rate. If the RBI hikes rates, your debt instantly becomes more expensive and you have no say in it. You sign the agreement. Even more deceptive are 0% EMI or interest-free offers. Sounds great, right? But many of these come with a deferred interest clause. If you miss one single payment or don't clear the full amount by the deadline, they will retroactively charge you interest on the entire original amount from day one. Imagine buying a 20,000 rupee laptop on 0% EMI for 12 months. You pay diligently for 11 months, miss the last one, and suddenly you owe 12 months of interest on the full 20,000 rupees, not just the remaining balance. It's a legal ambush. So, is it hopeless? Should you cut up all your cards right now? For many, yes, that might be the best option. But for the financially savvy, for those who understand the game, credit cards can actually be a powerful tool to build wealth, earn rewards, and even get free money. You just need to know how to become a deadbeat in the eyes of the bank. In banking terms, a deadbeat isn't an insult, it's a badge of honor. A deadbeat is someone who consistently pays their credit card bill in full every month, never paying a single paisa in interest. And you get to use their money for free, earn rewards, and boost your financial health. Here are the 3 golden rules to turn the tables and make the credit card system work for you, not against them. Golden rule number 1. Always pay your full statement balance on time. This is non-negotiable. If you cannot pay the full amount, you cannot afford to use a credit card. Set up auto pay for your full statement balance, not the minimum. This ensures you pay absolutely zero interest. You're essentially getting an interest-free loan for 30 to 45 days. Imagine your 1 lakh rupee salary. Instead of paying a bill on the 1st, you pay it on the 25th with your credit card. Your 1 lakh rupees stays in your savings account, earning you a little bit of interest for almost a month. That's free money. Golden rule number 2. Chase rewards, but never chase spending. Remember the merchant fees? You can claw some of that back. Choose a credit card that gives you good cash back or reward points on categories where you already spend money. Groceries, fuel, utility bills, rent. If you spend 30,000 rupees a month on these essentials and your card gives you 2% cash back, that's 600 rupees back in your pocket every month, or 7,200 rupees a year. That's essentially a free month's worth of groceries. But here's the critical catch. Never spend an extra rupee just to earn points. A 100 rupee point is not worth spending 1,000 rupees you don't have. That's the bank winning. Golden rule number 3. Use your card as a fraud shield and credit builder. Credit cards offer unparalleled fraud protection. If someone steals your debit card number, your actual money is gone from your bank account, and getting it back can be a nightmare. If your credit card is compromised, the bank's money is lost, not yours. They're usually much faster and more proactive in resolving fraud claims. Furthermore, responsible credit use is the fastest and most effective way to build a strong CIBIL score in India. A good CIBIL score is crucial for getting better interest rates on home loans, car loans, and even personal loans in the future, saving you lakhs of rupees. Let's do a quick side-by-side comparison to see just how big the difference is between a bank's favorite victim and a smart deadbeat. First, look at the payment method. The victim only pays the minimum, which is exactly what the bank wants. But the smart user, they pay the full statement balance every single time. Next, look at the mindset. The victim sees a 50,000 rupee credit limit and thinks, I have 50,000 to spend. The smart user knows the limit is irrelevant. They only spend what they already have sitting in their bank account. Now let's talk about rewards. The victim actually spends extra money just to get points, but then they lose all those gains by paying interest. The smart user only gets points on things they were already going to buy, and since they pay zero interest, those rewards are pure profit. And finally, the most shocking part, the interest paid. Over a year, a typical victim might pay 50,000 rupees or more in interest and fees. The smart user, they pay zero. Absolutely nothing. The net result is clear. One person falls deeper into debt with a ruined CIBIL score, while the other builds wealth and gets a free ride from the bank's own system. The credit card system is a legal scam. It's designed to exploit human psychology and complex financial math to keep the majority struggling. But now you know their game. You have the knowledge. And in finance, knowledge is power. So, will you be a victim of the credit card scam, or will you become a deadbeat and use their system against them? The choice is yours. If this video opened your eyes, hit that like button, subscribe for more financial truths, and share this with anyone you know who uses a credit card. And tell me in the comments below, have you fallen into a credit card trap, or are you a proud deadbeat? I want to hear your story.